And we're going to do a very quick market update. And then we're going to immediately move into our next session, which is the commercial REIA, which starts at 7:30. So I'm going to do a quick market update. So welcome everybody again to the Texas REIAs. We're going to tell you what's going on in the marketplace with a live market update. We're aligned. We are live. The Texas REIAs is the largest network of real estate investor associations and real estate investors in the great state of Texas. Over 150,000 members, participants, and attendees going back to 2003. And among the resources we provide the community is market data. So we're going to give you a little bit of market data right now. And then we've got our commercial REIA that starts shortly. So let me give you some summary data. If you wanted to summarize Texas, here it is. The average price house in Texas is $409,000, up 2% from a year ago. Median price house in Texas, $330K, down 1% from a year ago. So what does that tell you has happened in the last year? Not much. The market's pretty much flat. But if you only want to look at one data point, if you just want one data point that kind of summarizes the health of the market, I would say this is the thing to look at: months of inventory. What is that? Months of inventory. Months of inventory is the following. If you took all the houses for sale in the MLS and you stopped adding any more, so we're just going to take what's for sale and we're going to just sell them until there's none left, how long would they last? How long before the shelves are empty, right? And the answer is 4.5 months, which is also the average amount of time it takes to sell one house, 4.5 months. Now, average, right? Some take more, some take less. That's the average. Okay, so let's put this into perspective. They say if there's less than 6 months of inventory, you're in a seller's market. If there's more than 6 months of inventory, you're in a buyer's market. If there's right around 6 months of inventory, you're in a neutral market. Okay, guys, we're in a seller's market. And we have been in a seller's market now for several years. People think, well, when are we going to get a buyer's market? Well, we'll talk about that in a minute. Okay. Now, a year ago, there was 3.6 months of inventory. And a year ago, we had a hot seller's market. Now we have a lukewarm seller's market. But we haven't had a buyer's market in years. And there's a reason for that. If you look at the history, 2021 prices went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. 2023, flat. 2024, up 2%, which is basically flat. So the market went way up, it went up some more, and then it just flattened out. And it's been bouncing flat for the last couple of years. Why? Well, let's talk about what drives the market. And number one, the economy. The economy does not directly affect real estate. Real estate cares about two things: supply and demand. So only in as much as the economy affects supply and demand does it affect real estate. So for example, during the Great Depression, real estate prices went down a whopping 6%. Nothing. During the Great Pandemic, another 1 in a 100-year event, real estate prices went up 30%. It was not the economy. It was how the economy affects supply and demand. So what does it affect? Well, let's look at some of the metrics. Consumer confidence is neutral. Unemployment's good. We have good employment here in Texas. Job growth is good here in Texas. Stock market, lately it took a little dip, but it's kind of okay. Now, again, real estate doesn't care about the stock market, but when people look at their retirement account and they're making money, they're more likely to buy houses. They feel a little more confident. When they're losing money, they're a little less confident. So it's kind of got an indirect effect. Business growth, great in Texas. So for overall, the economy is pretty good. Affordability, we got a big one here. Interest rates. Interest rates went up. And when interest rates went up, houses became less affordable. right? And when houses became less affordable, what happened to demand? Demand went down. So there's not as many people, right, that can afford a house. And when demand goes down, that pushes prices down. That's why that's red, down. House price trajectory, prices are flat, not up, not down. Supply, active listings flat, months of inventory, still pretty good, right? 4.5 months, that's a seller's market. Housing permit trajectory, we're not building enough houses. We're not building enough houses. People keep having babies, keep moving to Texas. We're not building enough houses. Construction labor. We also got a problem with construction labor. Contractors are dying out. The average contractor, general contractor, is 58 years old. They're not getting replaced. Okay, so if you have a kid, a teenager, don't send them to college. Buy them a hammer. Okay, seriously. I know plumbers that are pulling in $1 million a year. Plumbers pulling in $1 million a year. I mean, do the math, guys. You can go to college, you get a ton of student debt, you graduate 4 years later with a pile of debt, and then you're competing in a market where maybe you get 100 grand, maybe you get 60 grand, maybe you get 80 grand, or you pick up a hammer, you don't work for an idiot, and you make a lot more money, right? But we need more. But construction, we're losing general contractors, so the cost of construction has gone way up. Housing demand, closed sales flat, pending sales flat, but this is the big one. In fact, this bullet should be like 5 times the size of all the other bullets. Migration. What is migration? Remember supply and demand? Migration is the ratio of people moving in versus people moving out. Population growth, that's demand. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? And there's another 10 million people, we don't know where they went, but there is a bunch of them here too. And they all need a place to live. So yes, interest rates went up and demand went down. True, but there's been some big offsets. One of the big offsets is we're not building enough houses and people are moving to Texas like crazy. Another big offset, normally when you look at houses for sale in the MLS, normally 2/3 are resale, 1/3 are new construction. Right now it's inverted. Right now it's 2/3 new construction, only 1/3 resale. Why? Why aren't people selling their house? Because they got the 3% mortgage and they don't want to give it up, right? So normally in this kind of a market, people should say, hey, honey, we're doing okay. Let's buy a bigger, nicer house. But they're not selling their house because they don't want to give up the 3% mortgage. So there's all this inventory being held off the market. So yes, interest rates went up and demand went down, but supply went down. And when demand went down and supply went down, they canceled each other out. That's why we never had a correction. That's why the prices have been just bumping along the bottom for the last 2 years. At the end of last year, something happened a little bit. Interest rates came down a little. When interest rates came down a little, right, what happened to house prices? They went up a little, right? So there's some correlation there. But if you were waiting around for some post-bubble breakdown, that was probably it. And there wasn't much to it. And then wild cards, there's a new president, we got a few wars going on, et cetera. So I'll give you our forecast. And by the way, our data comes from the Texas A&M School of Real Estate and a number of online sources. We're happy to share the data. We don't have some agenda here, right? We're trying to convince you the market's going up or down or sideways. Okay, when we have data showing it's going to go up, we're going to say it's going to go up. When we think it's going to go down, we say it's going to go down. When we think it's going to be sideways, we tell you it's going to be sideways, right? Because we have strategies for up markets, down markets, and sideways markets. And you got to be a student of the market when you're a real estate investor. So, but I'll tell you our forecast. And I'll also tell you this, our forecast, and I don't make the forecast, I'm just reporting the forecast. It's always been spot on. And it's not because we're like super geniuses, it's because it's not that complicated. Predicting the economy, very hard. Predicting the stock market, not possible. Predicting real estate, not difficult. And the reason it's not difficult is because it's supply and demand. We know how many houses we have. We know exactly how many houses we have. We know exactly how many houses that we're building. We know exactly how many houses we're going to have. We know how many people are having babies. We know about how many people are moving here. So we know how many we're going to need. We know how many we got, right? We know everything, right? We don't know interest rates exactly, but we got some ideas. So here's the forecast. Not much is going to happen. Interest rates will probably drop a little bit this year, maybe half a point, maybe a point, who knows? Sales should rebound a little bit this year. We're predicting about 2%. And by the end of the year, we predict the prices will be about 2% higher. Another year of not a lot going on. So was that helpful for you guys? Awesome. Well, like I said, we post all of our data on our websites. So I'll just poll the audience. There's no right or wrong answer. How many of you think that going forward, prices are probably going to go up? Who thinks prices are going to go up? Who thinks prices are probably going to go down? More ups than downs. Got a couple downs. All right.